Welcome to Investors Insights. Our topic today, Fed decisions, escalation, and war. That's an interesting topic. We chose that because there's a lot going on in the world today and a lot of news and media coming at each of you. And in our vlog, we like to focus to get you the information that we know can impact your portfolio, or as we coordinate and navigate through the markets, we keep you informed to have knowledge so that you can confidently follow what we're looking at, take you behind the curtain, and see the data and information that we look at, and we look at a lot of it here at Five Plan Partners. So today I'm joined by my distinguished colleague, Ty Miller. Ty and I have been in a meeting and great information. Ty, you've done a lot of research on this, and that's why I asked you to do the vlog with me today. A lot of people have been focused on the Fed. We've talked a lot about the Fed. What decisions are they going to make as the year progresses? No one forecasted that we would have geopolitical and war events going on at this time. So with that, which comes first, Fed decisions or watching the de-escalation or escalation of the war?
To your point, a number of policy events occurred, last week and then into this week, even as we're here early Monday morning, that have had a big impact on financial markets. Sure, today's reaction to the possible de-escalation of the war is top of mind. But I think, more importantly, is looking back last week on the Fed decision. So the Fed met last week. They decided to keep rates, with no change, which kind of was expected. Fed Chairman Jay Powell mentioned that he would stay on as Fed Chairman until this case against him is resolved, even if it goes past May 15th, which is when Kevin Morris was kind of scheduled to take over. So we, of course, are factoring that into things. But interestingly enough, everything that happened, arguably the Fed's decision had a bigger effect on the financial markets than anything. It appears that investors understand that not only, are we worried about the Middle East and the Iran conflict, but the policy response to this conflict is just as important. And so the Fed is kind of on this border of they don't really know how to treat this at this point by their own admission. They're no understanding of what's going on other than
because oil prices, gas prices can go up, inflation can kick back in. There's a lot of variables here.
Right. And that's their main fear, I would say right now, is naturally they're saying, well, oil prices are rising. We're worried about inflation. We actually think they should be more worried about growth at this point. As the war continues to go on, our growth, measures, our productivity, things like that are getting hurt. Inflation, as you can see in this chart, is more impacted by the money supply. And right now we're below trend on that money supply growth. As you can see, inflation lags about 13 months compared to where the money supply was. So think back to COVID, we printed a lot of money. Inflation came, a year later. Now we're not printing as much money. We're in a decent spot. Inflation is, while it's still above trend of 2%, hovering around 3% is not too bad. But what you don't want to have is this hurt on growth. And we think that maybe the fears of oil prices in the short term, which again, we do think could be short term, and not a substantial, inflation rise. We think that they need to be focused more on growth. And so right now the market's only pricing in like no Fed rate cuts or maybe even a rate hike. Now the Fed didn't use that dialogue per se, but we think that the Fed needs to seriously consider, at least one or two rate cuts this year instead of being completely neutral.
Right. Yeah. Well, and also from standpoint, I recently was in Palm Springs, and diesel was over $6. Gasoline prices, if you can believe this, like $5.50 heading for $6 with all this going on. Historically, though, correct me if I'm wrong here, but historically, you usually have these kind of scenarios, and then that first 120 days, they have an impact on the markets, but then level off. We experienced that with Ukraine and Russia's situation and some others. So the Fed's got to watch all this simultaneously. Yeah.
Yeah, no, you're correct. And the thing about Ukraine, that when that started, if you remember, we already had some pressure on inflation back, because I was 21. Right. We already knew we were kind of behind the ball on inflation. Now, with this, we're in a different kind of time period where inflation's not as big of a concern leading into this.
Right. So based on our previous vlogs and things we've talked about, from a corporate earnings standpoint, earnings are still looking very strong.
Yes, absolutely. Margin growth still looks good, but that's where we want to, as earnings season, approaches again. That's where we want to keep our eye on the ball and make sure that, sure, I'm sure energy companies will have good earnings, but we want to make sure everyone else is still handling things and still growing at the rate they need to be growing. We don't want to see that slow down in growth.
Right. So for those of you that have been talking to us, and as we've had meetings, the topic has been brought up about interest rates. This gives you some insight as to, well, with the war going on, with oil and gas prices, energy prices across the board, those changes occurring, watching out for inflation, a lot of variables. And so at this point in time, it's hard to predict or kind of look down the road as to what the Fed would do. But Ty, based on what you're saying, we might be able to see 2 interest rate cuts at best.
You're right, Greg. I think 2 would be, a maximum. Right now, again, the market's pricing in 0. So any kind of dialogue we get on some possible rate cuts probably would be beneficial.
Yeah. So we thank you for watching today. We hope this information has been invaluable to you. We're going to keep you updated because there's going to be a lot of data coming at us, and we're going to be sharing it with you. And just know that every day we come here at the offices of File Plan Partners, we're striving to see to it that our clients have a better, richer, fuller life. And this is one of the ways we do it, by making sure we keep you informed. We thank you. Have a great week. Cannot believe we're getting ready to end the first quarter of 2026. It's gone by fast, and there's a lot more to come. Take care. Thanks again.